Hey folks, Dan Frio, the rate update. Today is August 2nd, 2021. We're going to talk about when you come back is the Fed going to start tapering? What does tapering mean? And what effect is it going to have on the housing market? So don't go away. We'll be right back. Okay, so let me define what the Federal Reserve is doing right now and then what the term tapering means. So basically what happens is mortgage rates, as you guys who follow my channel know, are predicated by the mortgage-backed securities market. It's a bond that trades on Wall Street that is one of the biggest components of your mortgage rate. Okay, so here's how that bond market works. Is just like any other bond market, it's based on supply and demand. Okay, so the more the demand, the higher the price on anything you buy. Okay, I don't care if it's a car or a widget. That's how it works. So what the Federal Reserve's been doing is they've been buying mortgage-backed securities, the bond that is the component of the mortgage rate. They've been buying in the tune of $40 billion and more a month. So a huge amount of buying in that market. They've been pushing up the prices, or at least stabilizing those prices right where they are right now, to keep mortgage rates right where they are right now. Okay, the biggest fear is what's going to happen when the Federal Reserve stops doing that or reduces the amount that they buy, because that's less purchasing, the lowering the price, and when the price comes down on a mortgage-backed security, mortgage rates go up. Okay, so that's the biggest buzzword right now. When is the Federal Reserve going to start to taper, meaning pull back on their buying? Okay, so I want you to watch this video right now, and then we're going to come back and we're going to go over and see what the market's projecting and what time frame the market is looking at when the Federal Reserve is going to at least announce that they're tapering.
So was this overall a pro-equities message from the Fed, or did Jerome Powell effectively put the markets on notice until September?
Well, I would tell you this. I think that's a great question and a great way to frame it. But I would also say the consensus is that the Fed was going to elaborate more on their tapering project at Jackson Hole the end of August, or at the September meeting. And I think that remains on track. I think that when we think about the likely steps that the Fed will take, would be get to Jackson Hole, talk about things like the fact that tapering would take some form or shape of X amount of dollars on a monthly basis, but likely start several months from now. So I think that that happens in September, and we have a December start to tapering. What was interesting in Q&A to me was that Jay Powell got a lot of questions about the shape, right? The structure of tapering. And there's been a lot of questions around whether mortgage backs, as part of that monthly purchases, needs to be attacked first or reduced first. And he didn't push back on that. He said there's a conversation around the table around that. So we actually think that come December we'll be paring back $10 billion a month of the 120 in equal portions, such that mortgage backs will be eliminated over the course of time faster than the Treasury purchases. And I think that's relatively new news. But I think in general, this was a much more dovish meeting for markets, in so much as that, they continue to talk about transitory, the inflationary pressures they're seeing. And I would say this: there was 28 questions in the presser. 22 of them had to do with inflation, and right. Jay Powell had to reiterate how he feels like a lot of these near-term inflationary pressures will recede as bottlenecks and log jams and supply chains loosen up.
Okay, so great explanation on there of kind of when we think things are going to happen and what's going to happen. So let's go to the headlines right now on what's showing out there in the world. So when you go to the Market Watch, it says home prices cool when the Fed tapers its bond buying program, but crisis unlikely. So why is it saying that part of the equation? Well, great question. We're not anticipating a market crash, because right now in the housing market, what's really pushing up prices, there's no supply. So if you really have no supply and tons of people bidding on a house, just like the bond market that we said, supply demand. You have 30 people that want to buy that one home because there's not many homes on the market. It's going to push up values tremendously. Well, what's going to happen when the Fed tapers? So they're going to come in and gradually make this move. That's what you're going to see. So there's really not a major hiccup in the whole system. Okay. The best thing that happened with all of this is what happened in 2008. The government, the Fed, they all learned massive mistakes that they were making, and they vowed not to make those again. You might disagree with that or not, but that's where we are right now. I'm not predicting a housing crash, because I think what's happening right now is there's a lot of people not selling properties because they're in the forbearance agreement. And I have numerous videos on that. Once forbearance is up at the end of this month, you're going to see a lot of inventory come back on the market. A lot of that inventory is going to have people that are in a bad position, but fortunately they have equity in their house, because over the last year or two, they probably saw a 15 or 20% rise in the value of their home, giving them much more equity in the house so they can sell it. And they don't have to go into foreclosure. They can actually sell it. Even if they walk away with maybe $100, they're at least able to sell it. So the other headlines that we're going to see is right here. So substantial discussion on Fed taper may push to December. So when is all this taking place? Okay, and that's the video that you just saw. I'm predicting they're going to mention things at the Jackson Hole meeting. That's in the late August, when all the bigwigs throughout the whole country and the world get together and they just talk, what's going on and what their plans are. They're going to plant the seed there. I can almost guarantee you. However, I don't think they're going to do anything, not in the August meeting, not in the September meeting, not in really any meetings until the end of the year. Why am I assuming that? Well, if you watch my show on a daily basis, I repeat these same things over and over and over. Okay, here's the backdrop that we see right now. We have forbearances. The forbearance basically means that people can postpone or put off a mortgage payment up to 18 months. And that is coming due now at the end of August. That's when everything's basically, it's over. Okay. So a lot of people haven't made a mortgage payment in a year and a half. Student loan forgiveness, I won't say forgiveness, I'll say the forbearance on that as well. You don't have to make student loan payments, or you haven't had to make student loan payments since March of 2020. So you don't have a housing payment potentially, and you don't have any student loans. Those are the two biggest costs that you have as a homeowner. So if you don't have those costs, you probably, let's say 70% of the people have excess money at their disposal. Okay. But because of that, you're not putting your house up for sale. You're not making a mortgage payment. So if I don't have to make a mortgage payment, why would I put up my house for sale until that program is over? Well, the program ends the end of this month. So my prediction is we're going to start seeing September, October, November, December, more and more and more homes entering the market. Okay. Also at the end of September, student loan deferrals are also going to stop. So now people are going to have to start making their house payment and their student loan payments. When that happens, you're going to see more houses come on the market. Now, are we going to have a crash in values? Not that I think of, or not that I know of, or I don't anticipate that, because there's going to be more and more coming on the market, but the value's already set. So we could basically see a little bit of stagnation right now, where home prices don't really go up because people are tired of bidding $50,000, $60,000, $70,000 over asking price. They'll start saying, okay, I'll bid asking price, but if you don't take it, I'll just go find another house. So that's my take on today on what's going on with the Fed, tapering, mortgage rates, and all that stuff. So let's get on to where mortgage rates are today. So what we follow here to figure out where that is right here. Let me explain what we're doing here. This is the price of what happened today with the mortgage-backed securities market, the bond. So the bond price went up 17 ticks. So what did I just explain to you about the Fed? When the Fed comes in, they bring up the price of bonds, like we saw today, and conversely or inversely, what happens is mortgage rates drop. So when mortgage-backed security prices go up, mortgage rates come down. So we see a nice little move today in that market. Okay, so let me give you a little bit of backdrop on where I think rates are going to go, or are they going to stay steady? This gives us a chart of what happened in the last quarter. Okay, if you go back a little further from here over to our left, we had a nice little rally into the May Federal Reserve meeting. And then this tapering talk came up, as well as inflation. Then we had a setback. Then we gradually moved back to where we were. Then in June, we had Federal Reserve meeting and it dropped it again. And then we came all the way back. Last week, we had the Federal Reserve meeting and we didn't have a crash. That was huge news in my opinion. Okay. So we continued to move up right here. But here's what I'm seeing. I'm actually saying mortgage-backed securities are overpriced at this point. Why? Okay, let's get to that. All right, so these lines right here, we call Fibonacci levels. Okay, these two lines up here are basically top end resistance on where the bond market mortgage-backed securities should trade. And then we see a line here, and a line down below. Those are floors, all right? So we're hitting new highs right here, and I don't think we should be, personally, okay? So the next thing I follow is other resistance levels. So in those areas, we follow the 100-day, 50-day, and 25-day moving averages. Those put us right here, okay? Even if you broadened out these lines to say, let's see if, it's hard to move my mouse on this thing. If you extended those out, there's where you would be. We far exceed that as well. So I'm saying we're overpriced at this time. Where I think we should be, and I've been saying this for a month or so, at the 101.8 handle right here, and that's where we should be. So I'm looking at this like a gift horse in the mouth right here. As soon as I see a slight reversal in this, I'm going to start locking all my clients, because I think we're going to have a drop back down in this area here. And again, when this drops, when the price drops, the rates go up. Okay. So other things we follow is what the economic calendar looks like for the week. So is there anything here that really should give us some caution going into the day? So today, nothing. Tomorrow, nothing. ADP private payroll, this is going to be reviewed, but I hate to say it, ADP misses this number a lot. So I'm going to actually wait until we get Friday's number for the unemployment rate. Okay, that number is what the Federal Reserve is really watching. They really don't give a crap right now about inflation or anything else other than employment. All right, Thursday we're going to have the initial jobless claims and continued jobless claims, but these are all over the map. And if these get worse, there's more and more people filing for claims, and then the unemployment rates or the employment numbers don't start ticking up, you're going to see the Federal Reserve not really doing anything, and they're going to keep everything low. But if you start seeing a good improvement in the jobs market, you're going to see a rapid deterioration in these numbers. So again, don't look a gift horse in the mouth. If you like the numbers right now and you're sitting on the fence saying, I don't want to refinance or do something, I would do it now. And that's my backdrop there. What happened today, if we break down the day, we actually had a nice rally into about noon, and then basically everything went stagnant, which is fine. I'm cool with this chart. I loved it all the way up till noon, and then we didn't give it all the way back, so I like those factors there. Let's go over what mortgage rates did for today. So we go into this number right here, and this is where what I follow here is Black Knight. These are not my rates. These are Black Knight's rates. They survey mortgage lenders all over the country. We reply, and here's what they come up with. The 30-year rates on conforming jumbo, FHA, and VA. The 30-year conforming rate right now is 2.99, jumbo 2.97, FHA 3.1, VA 2.64. 1 day, 7 day, and 4 week deltas. Delta means change. So how much did it change from Friday? Really, not much anything, because 3 basis points equates out to 0.03. So you're going to need basically at least a 0.1, 10 basis points or more for you to really see any changes in rates on our rate sheets. Okay, 7-day delta, basically not much of a move there as well. When you get to the 4-week delta, the 1 month delta, that's when you're starting to see changes. You're starting to see now about a 20 basis point reduction in rates. So that means rates are probably about 0.25% lower today than where we were a month ago. So if you like my channel, all I ask you to do is a couple things. Please Give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. The next thing is, if you're in the mortgage process right now, shoot me a copy of your loan estimate. I'd love to review it for you to see maybe we can get you that rate, maybe save you some money on closing costs. Maybe we can get you a lower rate. Maybe you aren't locked in, or you were locked in and it was a month or so ago, and it was when rates were way high, and you can see now rates are about a quarter lower than they were a month ago. So maybe you can come over to us and we can lock you into today's new fresh rates. But if you're looking to build, buy, or refinance, please give us a shot. I'm going to show you how to find us on the web. But if you're in a forbearance, I'm going to stop right there and just ask you to call us. Why? Because there's about 1,000 different options that you're going to have for an exit strategy, and we want to make sure that you're put into the right one. Mortgage lenders, I'm going to go a little bit more in detail tomorrow. I had an interview with a real estate attorney last week, and he kind of opened my eyes to some of the modifications that people are doing now when they're in the forbearance, and it's not a good thing. So we're going to go over that in detail tomorrow. So how do you find out more about me and my team? The best way to do it is go to therateupdate.com. It'll take you here. And there's different ways to get a hold of us. If you're like, I want to apply now and get the ball rolling, just hit the apply now button. If you want to call, awesome. Give us a call at 844-775-LOAN right here. Or if you're like, Dan, I'd rather schedule an appointment so I can talk to somebody one-on-one, either by Zoom or by phone, just click here. It'll give you a calendar. You can pick the day and time available that we have and that you have that correlate, and then we will get in touch with you at that day, at that time, via Zoom or phone, however you deem that you want to do it, and we'll answer any and all the questions that you have. So that's it for today, guys. Thank you for watching. God bless. Have a great day. I'll see you tomorrow. Bye-bye.